12th of June 2023, Monday, MAO with Cal once again. Now, when everyone is so bullish around me, everyone is so bullish in the Wall Street, what do you think will happen soon? Is irrational exuberance at its best. And I can tell you this is not going to end good. It's just a matter of time. Just be careful, guys. You don't want to meet the point whereby you're buying and holding the baby while the Wall Street guys are dumping to you. All right. More details coming up. Disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now, first of all, let's discuss what happened on Friday. Wow, Tesla, $244. Now, I'll be honest here. I never expect to be so high, but when I know that Elon Musk go to China, you know what happened the last time when Elon Musk shares was coming down. He went to China, and after that, he came back. Oh my God, the share went all the way up. So this time around, is it the same thing? Well, your guess is as well mine. Now, Dow up 43 points, Nasdaq up 43 points, incredible coincidence, and the S&P up by 5 points. So overall, we don't see much movement in Microsoft, Google, Meta, and Amazon. In fact, the main driver was Tesla. Okay, so the thing is this right now, the S&P notches a fourth straight positive wick, which basically leads up the bull market. But I'll tell you something very important. Let me show you in a short while time. But you look at it right now, this is the S&P 500. Now, the thing is this, why the market is feeling so bullish right now, despite all the so-called economic data are not performing? Because look at it, this was a low back in October last year. And whether you like it or not, it was at this point here where the price came down, right? Which means that within less than 6 months, the S&P dropped from 4,250 all the way to 3,500. Okay, so it took probably about 4 to 5 months for it to drop that much. But the market stretches itself for months and months to finally come to this point. So that's the reason why the people are feeling that this is a bull market. This is the real reason, because the market has been generally going up the last few months, and it has dragged since last year, October till now. So in fact, this is like 2022, 21 instead. So that is how long it has stretched, okay? So it's quite easy to understand why people are feeling bullish right now. So of course, yes, and this is a fourth straight week for the S&P. And of course, we all know that sentiment now is very bullish right now. And of course, we all know that the FOMC meeting, people are expecting a 71% probability that the central bank will pause interest rate hiking. I really don't think so. Put it on record. I don't think so. I believe there will be a 25 basis point, and that will stun the market. All right, so I got my reason. I'll tell you more in detail, but let's look at Tesla. Now, Tesla is far and away the most overbought stock on Wall Street. You can see it's really at the RSI at 91.46. Come on, guys. We all know the RSI, when it hit 80, is overbought. Sometimes even 75 is overbought. But to look at 91, oh my goodness. And of course, the buying percentage is at 40.43. That is very high. And of course, the average as well is at minus 17.42. Next counter itself is more like this counter, Adobe, as in the one people like it. And of course, this one is Gen Digital and Norwegian Cruise Line Holding. Now, the oversold, we have a few, but Target is primarily one. Cooper Company is next. And of course, we have this company called AutoZone and Dollar Tree. So guys, take a pick. If you think that this guy's on overbought, is overdone, then it's time to short this counter. And those, if you think you're bullish right now and this guy's oversold like at 4, my goodness, RSI at 4, oh gosh, all right, maybe you know buy. But I tell you this, guys, avoid, because if the market is going up so much and yet these counters are all the way down, it will be very scary to see what will happen to them later on. Think about it, right? So why am I so excited with this right now? Because the IWM, all right, is the ticker symbol for iShares Russell 2000 ETF, and this is one of the main ETF that tracks the Russell 2000 index. And this index have shown that it has an unprecedented 1.04 million call option traded last week, and this is really easily a 10-year record and call open interest in IWM. I mean, guys, this is crazy. The last time we see something of this sort of craziness is back in 2007, and we all know what happened in 08. The market peaked, bang, the market came down. So what do you think we should do right now? To me, it's all right. Just be careful. Bullishness is still intact. You just have to be very careful because look at it. Collectively now, the accounts is 16.7% of total US single stock net exposure, the highest level since May 2020 versus a peak level of 18% since March 2020. So you can imagine now everyone is buying something from the market, especially the single stock. And obviously the six counters, including the FANGs, are the one that people have been buying. And if everybody is buying, definitely the greed is that 77 right now. We've seen this many times before. As much as you want to guess what will happen next, we all know that every time when extreme greed past 75, it will stretch a bit to 77, 79, 81, and then bang, that is where the selling comes in. And you don't want to be catched there because now the scary part is this: as of last week, this is crazy. 44.5% of the traders are actually bullish. Now, this is a very high number. In fact, itself, right, you can see the historical average is 37.5%. Even the 1 year bullishness, we are at the same level right now because this is the level. So that's the reason why this won't end good, guys. When everybody's buying, just remember this: for every transaction, there's a buyer, there will be a seller. Hence, therefore, with the FOMC meeting 2 days from now, and 73.6% of people all looking at a pause in the interest rate. Think about this. Let's say they really pause it, but they tell you the next one there'll be a hike. The market will sell. This is not going to be good at all, guys. You just have to be very, very careful. So that's the reason why the Citibank side, another camp. Now, do note, Citibank is actually bullish in the market, but this particular guy, he says that the bear market is not over. So let's see what he has for us. Let's take a look right now. Let me bring it to you. Okay, here we go.
Notes, and this line jumps out at me, that while the worst looks to be behind us, the bear market journey is not yet complete. Walk us through that call. Why is that the case?
Well, look, we think that the Federal Reserve is not entirely done with tightening monetary policy, trying to restrain U.S. economic growth. They're not going to be satisfied unless the unemployment rate rises more significantly. Now, how that can happen, I think, varies a lot from people's expectations. I think that if you look at our mid-year outlook report at Citi Global Wealth, we've seen investors believe that there's a singular moment in which the entire economy collapses, financial markets collapse, and suddenly all of the risks will be behind them. Instead, we think that there are really rolling recessions that are ongoing in some industries right now, manufacturing, trade, and some components of construction. This is helping get that behind us, in fact. And
all right, so you can watch the whole video later on Trader Boys. The point is this: he's actually right. The market is actually only holding up because of certain stocks that's holding the market up. But once this is over and done with, things will get very bad. But the thing is this: most important now, the euro has entered a technical recession, 2 consecutive quarters of negative growth. And isn't that a sign? Because now you can see across the euro side, there are 7 countries are down, contracting itself in economy, and this is not going to end well. It will have a spillover. In fact, it's all right. Very interesting. Last year, it's all right. Goldman Sachs came in that they will outgrow the U.S. economy over the next 2 years. But yet now today, we actually have a technical recession. So what is the one that drive it down? It's because of the crude oil. We all know that Russia has been doing a lot of this trading with European previously, but then when the sanction oil came in, then of course the number of shipments to Europe was all the way down to such a low level. Hence, therefore, inflation shoot up for the Europe side because they have to follow the sanction rules, and that's what's happening right now. And we all know that ECB is trying to hike rates further in June and July. This will definitely going to hit the economy even harder. And of course, now we all know that Scholz is trying to meet Putin, maybe to talk to him down to stop the war, or maybe to just ask him if there's another way to get the crude cheaper. We all know that, right? So the thing is this right now, the Saudi has decided to do a solo oil production cut. And again, this is not good. But the thing is, we also saw the crude oil price coming down. So what's happening? Let's look at what he has to say for all of us.
OPEC Plus tried once again to put a floor under oil prices this week, with Saudi Arabia taking all the hit for a short-term production cut. As important as oil remains for the global economy, we've come a long way from the days when Saudi Arabia and OPEC could transform geopolitics by a single decision, a world described on Wall Street Week by Milton Friedman way back in 1980.
The oil problem is a major problem. We are very vulnerable in the Persian Gulf. It's a major source of danger to our national security. There is nothing we could do that would improve, from a long-run point of view, our strategic position in the Persian Gulf so much as abolishing the Department of Energy, ending oil and gas price control, and forgetting about the windfall profits tax, because those measures would be strong measures to make us independent of Persian Gulf, to make us less dependent on that very vulnerable supply of oil.
This week, we turn to oil expert Dan Yergin of S&P Global for his take on the Saudi decision and the reasons behind it.
Saudi Arabia sees itself now as a central bank of oil, and that it's, as the oil minister said, that a petroleum minister, they would do anything to stabilize the market. So they thought a 1 million barrel a day cut in July would be a bridge to the second half of the year. And the general expectation is that the fundamentals in the market will tighten. And so this was to prevent the price from slipping further.
That was Dan Yergin, author of The New Map, Energy, Climate.
So we can see right now, right, the crude oil didn't do much. In fact, the crude oil came down, right, to $68. So the thing is this, I'm still looking for crude oil to come down to average about $64. I think that will be a very good buy for crude oil, because we have seen it before. Every time when crude oil comes down to $64, we do see it going higher. Now, of course, at the moment now, it has gapped, it's now at $68, trading now at 68. So anything lower to 64, guys, watch out for this. This could be very good for all of you guys. Okay, so what we have right now is that economy-wise, the US is moving up strongly, but we all know that globally, the oil production itself is going to dampen the entire mood, all right? And of course, Goldman Sachs now come on and says that they're going to slash the oil prices forecast. I mean, they've been flipping around. One moment, they're saying about $110, then $100, $85, back to $100, and now they're cutting again. Come on, I'm losing track. But to me, it's how Goldman Sachs says how they do their game, as usual, as always, all right? So let's look at the Dow Jones right now. Well, very important, we do see the Dow now trying itself to hit the 34,000 level. 34,000 is not too far away. This is an important psychological level. I'm not even half surprised to see the Dow touching 34,000, then you will see some selling. All right, so look out for 34,000. That's my mark here itself, because you can see the market is now above the Fibonacci figure. So we have to follow the rules. As long as the market stays above 33,800, yeah, this number here, write it down somewhere, 33,800. As long as it stays above it, we are okay. But if you start to sell below it, then I'm going to tell you that the Dow will come back down all the way to the moving average, which is now residing at 32,766 level. Yep, that is my view on the Dow. And of course, if you look at it with the VIX itself, this is incredible. Now, VIX has continued slide to below 14. Now, this is really incredible, because the last time we saw something similar like this, it was all the way back here itself in 2021 October period, and of course in the June-July period in 2022. And of course, both times itself, when this happened, there is a possible pullback of the Dow. Can you see that? Of course, the next one that was a little bit heavy was back here itself in about November period 2021, where the Dow came off quite a fair bit. So now, if let's say we're going to repeat this once again, then of course, I believe that the Dow coming down to 32,800 is possible once the 34,000 level is reached. All right, so guys, watch out for the Dow Jones. I suspect that there will be a turnaround, okay, a turnaround point roughly between 13 to 15 of the month. That means that roughly on these few days of June, I suspect that that is where the market will do a U-turn. So let's see whether my forecast is right. I'll update you guys more in details. This is Cal signing off. Take care. Bye-bye.